Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2021, Part B. The subject code is BYA4A. This question chapter is amalgamation, absorption and external reconstruction. The question number is 17. Let me read the question. Ravi Limited and Kumar Limited decided to amalgamate and a new company, Ravi Kumar Limited, is formed to take over both the companies as on 31st March 2018. The balance sheet. In the liabilities side, share capital at rupees 10 each, 5 lakh to Ravi Limited, 2,50,000 to Kumar Limited, bank loan 50,000 to Ravi Limited, 1,50,000 to Kumar Limited, creditors 1,50,000 to Ravi Limited, 2 lakh to Kumar Limited, bills payable 1 lakh to Ravi Limited, 1,50,000 to Kumar Limited, general reserve 50,000 to Ravi Limited, 50,000 to Kumar Limited, profit and loss account 1,50,000 to Ravi Limited, 4 lakh to Kumar Limited. Capital reserve 1 lakh to Ravi Limited, 1 lakh to Kumar Limited. The total liabilities are 11 lakh to Ravi Limited, 13 lakh to Kumar Limited. In the asset side, land and building 1 lakh to Ravi Limited, 2 lakh to Kumar Limited. Plant and machinery 5 lakh to Ravi Limited, 6 lakh to Kumar Limited. Goodwill 1 lakh to Ravi Limited, no value to Kumar Limited, and patent no value to Ravi Limited, 1 lakh to Kumar Limited. Stock 1 lakh to Ravi Limited, 1,20,000 to Kumar Limited. Debtors 2 lakh to Ravi Limited, 1 lakh to Kumar Limited. Bills receivable no value to Ravi Limited and 80,000 to Kumar Limited. Cash 25,000 to Ravi Limited, 15,000 to Kumar Limited. Bank 75,000 to Ravi Limited, 85,000 to Kumar Limited. The total assets are 11 lakh to Ravi Limited, 13 lakh to Kumar Limited. The following is the accepted scheme of valuation of business of two companies, Ravi Limited. A. Create provision for bad debts at 10% on debtors. B. Right of goodwill by 50,000. Right of 20% on plant and machinery and 10% on land and buildings, and right of 20% of stock. Kumar Limited. A. Right of 10% on land and buildings and 20% on plant and machinery, and create provision for bad debts at 10% on debtors, and right of payments by rupees 25,000. You are required to compute purchase consideration for both the companies. Based on this information, we are going to calculate the purchase consideration of Ravi and Kumar Limited. Before going to prepare the purchase consideration, we should know these notes information. Ravi Limited and Kumar Limited are selling company or transferor company. Ravi Kumar Limited is a purchasing company or transferee company. Then net asset method equal to total assets minus external liabilities. External liabilities equal to current liabilities plus debentures plus funds. Current liabilities equal to sundry debtors, bills payable, bank overdraft, plus all the outstanding payments or payables, etc. First, we are going to prepare the working notes for Ravi Limited. Under the Ravi Limited, the first working note is a provision for bad debts at 10% on debtors. So equal to debtors of Ravi Limited multiply with the percentage of the provision. 2 lakh multiply with 10 divided by 100, we get a 25,000. So the balance debtors of Ravi Limited would be 2 lakh minus 20,000, we get 1 lakh 80,000. And right of goodwill by rupees 50,000, that is working notes 2, equal to goodwill of Ravi Limited in balance sheet minus right of goodwill value equal to 1 lakh minus 50,000, we get 50,000. And working note 3 is a right of 20% on plant and machinery equal to plant and machinery of Ravi Limited multiply with 100 minus 20 divided by 100 equal to 5 lakh multiply with 80 divided by 100, we get 4 lakh. And working note D is a right of 10% on land and building equal to land and building of Ravi Limited multiply with 100 minus 10 divided by 100 equal to 1 lakh 90 divided by 100, we get 90,000. And working note E is a right of 20% of stock equal to stock value of Ravi Limited multiply with 100 minus 20 divided by 100 equal to 1 lakh multiply 80 divided by 100, we get 80,000. And Kumar Limited working notes, under the Kumar Limited, the working note F is a right of 10% on land and buildings equal to land and buildings of Kumar Limited multiply with 100 minus 10 divided by 100 equal to 2 lakh multiply with 100 minus 10 divided by 100. Then 2 lakh multiply with 90 divided by 100, we get 1 lakh 80,000. And working note H is a provision for bad debts at 10% on debtors equal to debtors of Kumar Limited 10 divided by 100, then equal to 1 lakh multiply with 10 divided by 100, we get 10,000 as the provision for bad debts to Kumar Limited. The balance value of debtors of Kumar Limited is 1 lakh minus 10,000, we get 90,000. And working note I is right of patents by 25,000. The balance value of patents of Kumar Limited is equal to in bracket value of patents of Kumar Limited minus right of value of patent 1 lakh minus 25,000 equal to 75,000. That is balance value of patents of Kumar Limited. Then we are going to calculate the purchase consideration under the net assets method. In particular column, value of assets taken over by the Ravi Kumar Limited. So as I said earlier, Ravi Kumar Limited is a purchasing company. Under the Ravi Kumar Limited, we have to mention land and building of Ravi Limited as per the working note D. The amount is rupees 90,000, which we have to mention in the Ravi Limited column. And the land and building of Kumar Limited as per the working note F, the amount is rupees 1,80,000, which we have to mention in the Kumar Limited column. And the plant and machinery of Ravi Limited as per the working note C, the amount is rupees 4 lakh, which we have to mention in the Ravi Limited column. And the plant and machinery of Kumar Limited as per the working notes G, the amount is rupees 4,80,000, which we have to mention in the Kumar Limited column. And goodwill of Ravi Limited as per the working note B, the amount is rupees 50,000, which we have to mention in the Ravi Limited column. Patents of Kumar Limited as per the working note I, the amount is rupees 75,000, which we have to mention in the Kumar Limited column. And stock of Ravi Limited as per the working note E, the amount is rupees 80,000, that is we have to mention in the Ravi Limited column. And stock of Ravi Limited as per the working note E, the amount is rupees 80,000, which we have to mention in the Ravi Limited column. And balance of debtors of Ravi Limited as per the working note A is 1,80,000, which we have to mention in the Ravi Limited column. And balance of debtors of Kumar Limited as per the working notes H, The amount is rupees 90,000, which we have to mention in the Kumar Limited column. And bills receivable, no value to Ravi Limited, and 80,000 to Kumar Limited. Cash 25,000 to Ravi Limited, 15,000 to Kumar Limited. And bank 75,000 to Ravi Limited and 85,000 to Kumar Limited. So the total assets of Ravi Limited is 9 lakh and Kumar Limited is 9 lakh 25,000. Then less external liabilities. Under the external liabilities, we have to mention bank loan 50,000 mentioned in inner column and 1,50,000 mentioned in outer column. And creditors 1,50,000 mentioned in inner column and 2 lakh mentioned in outer column. And bills payable 1 lakh mentioned in inner column and 1,50,000 mentioned in outer column. The total external liabilities are 3 lakh for Ravi Limited and 5 lakh for Kumar Limited. Then we have to mention purchase consideration. Purchase consideration in bracket A minus B. The total A for Ravi Limited is 9 lakh minus 3 lakh, we get 6 lakh as purchase consideration of Ravi Limited. And the Kumar Limited, the total assets is 9,25,000 minus external liability of 5 lakhs. So we get 4,25,000 as purchase consideration of Kumar Limited. That's all.